Hi there, I'm Trevor Coote, and this is Business is Fucking Hard, the podcast where business owners pull back the curtain and talk about the realities of owning a business. We'll hear their stories, learn some lessons, and have some fun along the way. Thanks for joining us. On today's episode, we are joined by Anna Solnickova. Anna is a certified professional accountant and founder of CFO Consulting. After realizing that it was time for a change from her well-paying executive role, Anna did some reflection and found herself on an unexpected entrepreneurial journey. Making her expertise available to businesses in need as a fractional CFO fulfilled Anna's desire to be helpful and have impact. I hope you enjoy this episode. Anna Solnickova, welcome to the podcast.
Thank you so much for having me.
Yeah, it's good to have you here. I appreciate you taking the time. As you and I were just talking about before we hit record, I'm looking forward to hearing your perspective, not just in your business journey and kind of what that experience has been like, but your business provides services to other businesses and gets very involved in kind of those other businesses. So it'll be interesting to hear your perspective as far as the title of the podcast is concerned, and what you're seeing through the lens of other organizations. But before we get there, before we kind of dive into that side of things, tell me what your start into business or entrepreneurship. What was that first introduction for you?
Yeah, great. So I'm a CPA CGA, so I'm a chartered professional accountant, and I spent about 20 years working in industry, so I was working for other companies. And up until July 2023, I was working for a company in North Vancouver, and I had been there for 13 years. And at that point, I decided that I needed a change. So didn't know what that was going to look like, but I had resigned from that role, took about 2.5 months off, did a lot of soul searching. And the end result of that was that I had 3 key takeaways. I really wanted to make sure that I hone in on my core values of integrity, transparency, and kindness, and that whatever I do going forward is based on those pillars of core values. That I'm most fulfilled when I'm being helpful, and that I'm most happy when I'm being recognized for my authentic self. And the third takeaway was that life is what you make it. So having those 3 takeaways, I realized that there is this need for fractional CFOs, fractional anything really, because there are a lot of small and medium-sized companies that need that advice, need that C-suite help, but don't have the payroll capacity or even the workflow capacity for a full-time person. So that's how my company, CFO Consulting, was born in October 2023, and has been a really interesting journey since then of trying to navigate being my own employer, being my own business development team, being my own everything. Lots of ups, lots of downs, of course, but overall just an amazing journey.
So tell me more before we get into kind of that business side and launching that piece. Tell me more about the soul searching aspect, because I think so many people, like, what kind of exercises did you use to kind of come up with those pillars? Was that something that you devised from kind of understanding that would be a practice that could actually help you kind of understand what that journey would look like for you? Because I think so many people, especially as they're contemplating, I've talked about this with other guests, that people in a 9-to-5 fantasize about the freedom of being an entrepreneur, and entrepreneurs fantasize about kind of the limitations, the box that is a 9-to-5, and you don't have to take things home with you. So people, generally are trying to do that soul searching on a regular basis. What did that practice look like for you?
So for me, it was kind of a combination of things. My sister, who lives in Europe, was visiting for the whole summer. So it was an excuse to spend a lot of quality time with her, and just through a lot of deep conversations with her and my husband, and getting their perspective on what they had seen me personally go through over, really, I would say, the last 2 years, when I started to feel my mental health deteriorating. I was in a position that was very well paid. I was making a lot of money, but I had become very unfulfilled. I had become unchallenged. I had become stagnant and very burnt out. And that was not going away. Despite how many trips I took, however many long weekends I took, I just could not shake this feeling of I'm unhappy. I'm very well paid, but I'm unhappy. And I'm selling my soul for a job that I no longer found fulfilling. And so having my own take on that and just having this kind of pit of despair, really, but also having outsiders view on that and having them really tell me, we observe that you're happiest when you do X, Y, Z. So it wasn't just an internal soul searching. It was also asking those people that I trust and rely on the most to tell me their perspective and what they had witnessed me go through over the last 2 or so years. And then, of course, reading some self-help books, listening to some podcasts, and a lot of walks in nature, tons and tons of walks in nature by myself, really trying to gather my thoughts. A lot of crying too, like I'll be honest, some emotional breakdowns. So this really sucks. I wish I wasn't going through this, but let's be really clear and honest about what it is that we want and not want going forward. And once that became very, very clear, it's like the path just sort of laid itself in front of me.
Yeah, that's really cool. And so let's switch from kind of that emotional piece to the business, to the practical piece. Like, regardless of soul searching, you must have done something to explore that gap that you were seeing, that opportunity that you saw for small and medium-sized businesses, and kind of that fractional CFO opportunity. What kind of research and what did that look like to explore that?
I'll preface this with saying that I never envisioned myself being an entrepreneur. Like, being a business owner and entrepreneur was never on my wish list. It's something that I actually fell into by accident, and it was the best possible accident that could have ever happened to me. I'm very much an implementer rather than a visionary. So there are two different styles of leadership and how you go about things. And I'm very much the implementer. So I thought, okay, I'll leave that job. I'll take a few months off, figure out my mental health, and then go and be a CFO somewhere else. And that was the plan all along. I had applied for a job, which when I applied, I actually didn't quite realize was a contract. And then that contract is what spurred me to look into what else I could do. And so through reading and catching on to a few things on LinkedIn and really learning about fractional CFO and then talking to a few business owners that I know within my network is where that idea was born from. That realization that this is a need that nobody has really been able to tap into. And knowing that I have run companies for other people successfully and have a lot of accounting and finance and managerial acumen, and just this unbelievable belief in myself that I can achieve anything that I put my mind to. That's just something that's always been instilled in me by my parents and demonstrated through my success. I just thought, why not? Let's take this chance. And if after a year it doesn't work out, I can go and be an employee somewhere. But this is the time in my life that if I want to do this and I'm serious about it, this is the perfect moment and opportunity to do that.
Yeah. And so what did that, like, you kind of get a sense, you've already got a contract, you get a sense from, the people around you, the conversations that you've had, that this might be something. Was there still trepidation? Was there like even knowing kind of the administrative piece of setting up a company and that you've got to kind of go down that path and now everything's on you to make this work? Was there still trepidation at that point?
Big time, to go from making $500,000 a year to now, less than 100, now having to kind of really figure out, oh my gosh, what did I actually do? What the actual flippin' F did I sign up for, right? Very scary, very stressful, a huge adjustment to lifestyle, of course. And so it really started with wanting to connect with different networking groups. And I was very fortunate very early on to find a very supportive network called BNI. And that's really what equipped me with the tools and the networks and the opportunities that I needed to hone in on my business development and be in front of the right kind of people that I could benefit from and that could benefit from me, that win-win that I seek and I'm just so keen to explore.
Yeah. So let's dive into that. What does that look like, that service to, because I suspect that the majority of people listening to this are small to medium size, not necessarily startups. The community that engages with me, that I know listen on a regular basis, are established businesses, but they're not big corporate. Have an entire finance team kind of environment. So what does that look like? Kind of that actual service. What gap are you able to fill for these small and medium sized businesses?
Yeah, so a lot of business owners that I work with, maybe they do have an accountant or a controller on staff, but they're really struggling with understanding or planning for the future of their company. So I always think of it as, the bookkeeper tracks your expenses and records your transactions. The accountant helps you with preparing your financial statements and your tax returns. All of those things are backward looking, right? They're all recording things that have already transpired. My role is to look at all of that, translate it into plain language that the business owner can understand. Am I profitable? Am I not? Where is my biggest expenditure and why? And how could I maybe minimize or optimize those costs? But more importantly, what goals are you trying to accomplish personally and for your business? And how do we get you there? So that's really where the CFO comes in. Or what relationships are you wanting to engage in? Do you need to talk to a banker? I can connect you with those people. Are you wanting to negotiate a new lease? I can do that for you. I can review contracts. So it's really, I think of myself as a financial strategic partner for these businesses and help them in whatever capacity they need to unlock that next level of profitability or success by whatever metric they define success as, because it's not always money.
Yeah. And I mean, so like from my experience, when I, first starting out, you start this business, you have no idea of anything. And you're really trusting a few folks around you to kind of help you navigate. And I misplaced some of that trust. I've written stories about that, and I'm very, very open about that. But I think one of the areas from a finance perspective, and again, it's probably still giving you kind of the impression of this is where my business is today versus what are the possibilities, where can we take it, as you're talking about, but is through the bank or through the financial institution, right? And all of a sudden, a business owner is seeing these ratios that the bank is throwing at them and saying, this one's not right, and this one's low, and this one's high, and we don't like this, and this makes us uncomfortable. I had a really interesting conversation with a very successful business owner, entrepreneur yesterday, and they were talking about how the relationship isn't with the bank, it's with the banker. Yes. And if the banker themselves have a couple of bad loans kind of on the books, then they're getting pressure from the hires up to actually review all of their portfolio. And they might come back to you and say, we're tightening up these ratios because all of a sudden they're on the of on the brink. So, tell me more about kind of what that can look like for an organization. Because quite frankly, what you're explaining is something that I would have loved to have access to when I was kind of in that. As a business owner, you're working in the moment. This is what today looks like. This is my to-do list. This is all the things I have to, you can't there's a limited amount of capacity to kind of look at what is the potential for everything based on what you're seeing.
For sure. Yeah. And I'll kind of just back that up a little bit and preface it with,
please.
My service offerings are so long and diverse. It's probably about a 2-pager. So, I kind of just on that just to make it easier. But I mean, I work with even just, companies that are new and just trying to set up their QuickBooks Online and trying to set up their chart of accounts. I can do that. I can talk them through the basis of how do you do a journal entry and how do you hire and retain and coach good staff, anything like that. I also work with companies on, like you said, that financial reporting. Maybe they have a controller that is really excellent at doing accounting and reporting, but maybe isn't a CPA or isn't comfortable with that next level up, which would be that communication with the bank or doing the reporting. So those are all services that I look after, and any way that I can add value to the business, really. And I know that's like a catch-all, but I really mean that. So how I work with businesses on the forward-looking strategy, my kind of niche is working with businesses that are looking to buy other businesses. So on that mergers and acquisitions, on that M&A space, a lot of banks, because for them it's an investment, right? Why should I give you, Trevor, $1 million for your business? You're an investment to me. So I will do the due diligence on the company that the buyer is wanting to buy, and I will actually prepare the financial projections, the budgets, the forecasts for the bank, and make a business case as to why this makes sense from the bank's point of view. And then I will also work with the business owner on implementing systems, internal controls, metrics, staff, anything and everything that they need to make sure that they actually put forward the result and the numbers that they promised to deliver to the bank.
So one of the roles of in a corporate environment with a full-time CFO, that's part of the fabric of the organization, not just fractional or outside, but within is to help steer the CEO and the board away from manage risk, identify risk, manage risk, be way more practical about decision making versus kind of gut feel or strategy, kind of pushing boundaries a little bit as a CEO or somebody in that seat might do. The CFO is supposed to be that anchor. Do you find you have the relationship coming in as a fractional to be able to sit down with the business owner and say, look, don't do it. Or if you do it this way, or, and kind of influence some of that, strategic or visionary aspect that they might be bringing to the conversation?
I would say yes, but over time, right? So I have clients
Fair.
that are
Okay.
very varied in what they need. So I have one clients that have hired me for 2 or 3 hours of my time and I never hear from them again, right? And then on the polar opposite of that, I have clients where I'm in their office 1 day or 2 days a week and they've retained my services for 60 or 80 hours a month. And those clients over time, with proving myself and actually demonstrating the value that I bring, those are the clients where yes, they now rely on my advice at that level, where I will run analysis for them, tell them what their daily operating net income is and why it might be varied from the previous month. I'll point out what I call the green, the orange, and the red flags, and actually help them dictate or steer that strategy going forward so that they can avoid those pitfalls or they can be better equipped for a better position. So absolutely, it doesn't happen overnight. I always say business is all about relationships. So if you have that relationship with the CEO, then certainly you can have that impact and really have a positive contribution to the business as a whole.
And I assume that's like a lot of that relationship aspect is trust, right? They need to see you prove yourself with kind of some of the decisions, some of the advice that you're giving.
Yes.
Yeah.
Absolutely.
And so assuming they're, open to those conversations, you get to the point where they're open to those conversations. And what are some of the things that you see kind of as common things that might be maybe not missed, but diverting some of the attention of leadership in a business that you're able to kind of draw them back to? Are there kind of commonalities that you see?
Yeah, there are two big ones, and one is kind of tangible in terms of the dollar figures and the other isn't. So I'll touch on the first. So I'm seeing increasingly kind of almost an epidemic of business owners wanting to grow for the sake of growth. So they're really busy chasing revenues. I have to grow 20% or 200%. They tie their success to how much have my sales or my revenues increased year over year, period over period. And in that process, they sometimes completely lose sight of the costs, right? So they have a 200% increase in their revenues. I'm doing fantastic. Your costs have increased 300%. You're now in the red, right? So are you actually a successful, profitable business, or are you just too busy chasing those sales? So reeling that in, and that's where those monthly or sometimes even weekly reports come in really handy of how are we doing on our costs? Are we actually net profitable or are we not? Because otherwise we're putting a lot of stress on ourselves as leaders and our staff to chase these numbers that at the end of the day make us worse off, right? So, and they're very receptive to that. I think CEOs and managers in general, it's really easy to be excited about sales. It's not so exciting to be cutting costs by 10 or 15%. It just doesn't have that flashy appeal to it, right? And then the second thing.
Yeah. So before we go on to just because I want to have a little bit of a conversation around that because it's fascinating to me, and it really aligns. Like I've actually said this in previous podcasts too that I don't know how much I should keep referencing previous podcasts, but I think what it does is kind of build that line, that connection of the commonalities, the lessons that everybody talks about in business. But we've talked about that cost to acquire a customer, right? The cost to, in this particular case, it was a retail brand, it was a retail environment, but the owner was able to discuss eventually like metrics down to a detail because it's e-commerce. So they're able to pull all of the metrics and understand this is what it costs us to acquire a customer. This is what our retention rate is.
Mm-hmm.
And we need to keep those numbers in a certain range because we know that that's what that the revenue that we're getting off of each customer is only so much. And so we need to keep that cost to a certain amount. How in those conversations around, the revenue versus cost to increase that revenue, how much data are you able to acquire in order to really analyze the metrics on what it is costing to create every dollar of revenue? So I guess it would change for the company, but
it would change by the company. Of course, it also depends greatly on their level of reporting, their own record keeping, right? So
sure.
Everything just goes into 3 general GL accounts, then you don't have that granularity that you need. But generally speaking, a business, if I can look at 5 years worth of financial statements, and that number is very strategic because it's pre-COVID, it's during COVID, and then you have hopefully a few years of normalization. So you have a good sense for what the trends are. And if you do have a huge spike during COVID, then you know that, for example, paddleboards, right, or certain industries saw a huge spike in revenues during COVID. And then, of course, you have others like hospitality that had a huge decrease.
Right.
But you can kind of use that as long as there is a justifiable reason, you can have a conversation around also what the business owner and their team experienced during those times. And then you can have a really good idea of whether or not the current state of affairs is somewhat of a normalized volume, right? And you can kind of make the projections and the models off of that and go forward from there. So the more information, the better. But of course, the information is only as good as the record keeping. So the answer to your question is it depends.
Yeah. No, and that's a fair answer for sure. But I think one of the takeaways could be for any business that isn't getting that granularity in data, the more they can do that, the more opportunity they have to analyze and be able to adjust as necessary, right?
And I would say it's probably the most difficult thing in a business is really having that forward-looking mindset, because if you set up your records in such a way that every single thing is put into a separate account and tracked meticulously, you're paralyzing your business by red tape and bureaucracy and internal controls from within. But if you don't do that, then you're causing yourself potentially work in the future. So it's a fine line to work. And that's why I like to ask my clients, where do you see your business 3 or 5 years from now? What is the objective? And let's set up your books for that now and your systems for that now, so you don't have to then go and redo and reclassify a bunch of expenses. So it's a fine line of wanting to have the detail without having the paralysis by analysis, right? Or too much detail. Yeah. Tricky one.
Yeah. Fair. Totally fair. Yeah. And then before we get to the other point, I want to unpack a little bit more around this pursuit of revenue, because I think that environment, I mean, some of it is, kind of ego. It's driven by just growth, like that top line is an easy line to look at to see that your company is growing, regardless of what the net might be. And if you're in the red, but there's been created an environment. I think we're backing off from it a little bit. I talked about this in the past as well, is this lack of requirement to have profit in order to get capital investments. That venture capital money was really based on kind of an idea, based on market cap, based on, rather than is there at least a path to profitability. Is that some of the motivation around kind of that top line pursuit, that revenue pursuit is, just a strategy to get acquired, or just a strategy to show value in order to get VC money, or is it really just this lack of keeping an eye on what it's costing in order to generate that revenue?
I think it's two things. I think definitely it is that pursuit of capital that, definitely the private capital, the chasing of that certain sectors in particular, right? If you're in the tech startup or you're in any kind
Yeah,
of finance, definitely, I think that's a huge motivator. And the other one I think is just human psychology. Different people are driven by different motivators. And if you have a
fair.
business owner that is a visionary, that is like bigger number, better person, or their success really is tied, their self-image is tied to that number, then that's the other aspect of it. And it could maybe have nothing to do with capital at all. Maybe they're fully self-funded, or maybe, the bank has already approved them. So I think those two factors, external as well as internal, it's always important, I think, to keep in mind that psychology piece, because I think we take for granted that these business owners are humans and they have their own complex psychology that drives majority of what they do.
Yeah, yeah, totally. I just this is all really resonating because I just finished reading Shoe Dog, the by Phil Knight. It's the startup story of Nike,
Oh, okay.
and like the early days, like 1962 to 1980 or 82 or something when they went public. And there's several stories in there about his pursuit of top line revenue, and that it almost bankrupted them like year after year for a little while because they just needed the capital. They had to keep going to find capital in order to finance the pursuit of growth.
Hmm.
And that capital gets harder and harder to find when you don't have any reserves. You don't have any safety net for
Yeah.
banks or VCs to invest in, right?
Yeah,
So yeah,
absolutely. And I
super
do,
interesting.
yeah, and I do think that I've never read that book, but that definitely sounds very
Yeah,
likely.
put it on your list. It's actually really good. I really enjoyed it. Yeah.
Thank you. I will. I do think that that push and that drive is more prominent in the U.S. market. I think in Canada, in general, even the private capital firms
Sure.
are more risk adverse, and so they would want to make sure, every single client that I've ever dealt with, any investor has always asked for cash flows. So that would, of course, take into consideration net profitability, right? And how are you actually financing your operation? So, yeah, I do think that's an aspect of it. I do think in the US it is more of a pressure point than it is in Canada, but certainly not something to be discounted. Yeah.
Yeah, that's a really fair point. Totally. Okay, so we've got the one kind of thing that you're seeing, the commonality, this pursuit of top line revenue. What's the other?
Yeah. The other one is, just with what is going on in just around us in our society, this need, this desire for DEI, for inclusion, for diversity, for mental health, all of these buzzwords, and companies that are actually implementing that, and companies that want to but are struggling, whether it's they don't have buy-in from top leaders, they don't have buy-in from their employees, they don't have the money, or they just simply are stumbling with how to go about it. So that's the other thing I'm noticing is that there's this desire, there's this drive, there's this wantingness to go about it, but a lot of companies falling short for a variety of reasons. And it's not a blame game. It's just, there doesn't seem to be the infrastructure to implement this successfully. So we all talk about mental health, but what does that actually look like? How do we actually make that happen other than just there's snacks and yoga classes?
And are you able to help with that, or is that something that you're seeing as a trend? And I like are do you find that there's resources out there enough for business owners to be able to pursue some of that, or is it an ongoing challenge?
I think it's an ongoing challenge, and I think it always
Yeah.
has been. It comes down to that old school mentality of this is a transaction. I pay you a salary, you do a job. Our relationship ends there. And I think we're starting to realize and become more aware of it's much more than that. These people spend most of their time working with other people, and they should enjoy that time, right? Yes, it's a way to make money, but also how are we as human beings getting on with one another? So I don't do consulting in terms of that, but I do help business owners kind of just become aware of that. It is really difficult when you're sitting up on that throne to put yourself in the shoes of your employees, but also for the employees to put themselves in the shoes of the employer. Do you realize the financial strain your employer is under? Do you realize all of these things they're having to manage? So bridging that gap between employers and employees and managers and workers, and just trying to bring back that heart to heart, human to human connection, as I call it, and just trying to have these authentic relationships and conversations around what makes you happy, which will ultimately make you more productive, which will actually make the company more profitable. So this kind of holistic approach to that. Let's just treat each other as human beings because that's what we are.
Challenging though,
Challenging,
and
very.
yeah, and I think I've always said that the hardest part of any business, no matter where you are in the company, no matter how big or small the company is, whether it's a nonprofit, for-profit, publicly traded, whatever the scenario is, the biggest challenge is the HR piece, is the human
Absolutely.
aspect of the business. And whether
I
it's
could not agree more.
internally the people, the relationships externally with people, but it's that people, that human element that always is, creates challenges for leadership and for everybody in the
Yeah,
organization, quite frankly.
I could not agree with you more on that. Yeah.
Yeah. So I want to get your perspective, and you only planted the seed just now. I wasn't planning on going here, but I'll see if you have enough kind of experience and what you're seeing to be able to talk to this. Is more the ESG, and you kind of alluded to it around DE&I and kind of those that HR, that mental health piece. But ESG, environmental social governance, what kind of has evolved from corporate social responsibility. I feel like ESG might evolve again in terminology and kind of acceptance of it. We've seen a really like it was thrust into the spotlight. It's been around for a while, but it kind of gained a lot of prominence kind of around the COVID era, through especially with some of the big investment firms and asset management firms. And then we saw a little bit of, and are seeing a little bit of a pullback, a little bit of an equalization on what is the corporate responsibility on a social plane within kind of the broader impact of society. In the U.S., corporations have a primary responsibility to the shareholder. In Canada, the Supreme Court of Canada has determined that corporations, companies have a primary responsibility to the company, that broadens that scope. Where are you seeing those conversations with some of your clients, with some of those small and medium-sized businesses that, again, are resource restricted? Are they talking about ESG, about corporate social responsibility, about that broader societal impact of their business?
I am, and especially in that small, medium-sized space,
Interesting.
because they are oftentimes, like my business, value-based. So it's usually an entrepreneur or two or three people that have gotten together around being passionate about something, whether they're passionate about being a plumber or doing organic botanical skincare, whatever it is. That idea, that business is born out of something that is really close to them. And it's usually spurred from, I can't find this in the market, so I will be the change I want to see in the world. So that's something that they carry really close to their heart. And it's my job to kind of nudge them back into, hey, I know you're concerned with profitability, but are you now deviating away from what you said was at the core of you, which was making sure that your clients are supported in whatever it is, that you are transparent with your employees, that you disclose your financial statements to your employees as you said you would? Or are you now fearing that, oh my gosh, I'm making so much and I no longer want to be transparent? So nudging them in that direction and making sure that they're staying true to those values that they set out. But yeah, also just if you say environmentalism is important to you, well, how are you actually walking that walk, right? And if you say you care about governance, how are you actually going about that? So more holding them accountable. It is a delicate balance because, of course, I want to make sure that I'm not meddling too much with how they're running their business. But if this is a conversation we have at the onset and they say, these are the things that are important to me, these are my values, and I see them not upholding that, of course, it's my job to kind of course correct. And if they react negatively, then it tells me what I need to do, need to know. And sometimes that means the relationship has come to a natural end.
Right. Yeah. And I want to actually dive into that a little bit in a second, like just kind of where that parting of ways might happen, because I can see it happening, from a natural state of growth of a company and being able to do the job now on their own, but we'll get into that in a second. I'm fascinated around, I'm so fascinated around kind of the ESG, especially kind of this roller coaster that has been ESG over the last 5 or 6 years. It's my major research project in the Master of Laws that I'm doing right now. So this is really, kind of grassroots information and of value. But I really see this push and pull, and you've really articulated that well with kind of the values-based system. Like if a business owner can connect it back to their values, then that ESG becomes an easier conversation internally. But would it always be like that connection to revenue, that drive of a business that inherently has to come around profitability? We in order for this business to continue to exist, in order for it to create the value add to society that I see it being able to create, it needs to make money. And is there kind of this collision of, or a challenge around the collision of profitability over the values that the business owner wants to continue to uphold?
It doesn't have to be. And it comes back down to what I said previously, which is what drives the business owner and the people that they have around them, right? So if you have a culture where everyone is okay not having increases in pay because they know that the company is giving more to causes that they all communally support, if they know that everyone taking a 10% pay cut so that everyone can keep their jobs is the thing that they're all on board with, then I feel they have that balance of profitability and keeping true to their values and ESG. So it comes down to what is at the core of not just the business owner, but also the whole ethos of that company. What are the values and just commonly accepted guiding principles of that company? And if profitability just means that all people get to keep their jobs, and profitability just means that they get to keep the doors open, even if, the bottom line is not as great as it could be, but the cost would be that 50% of the staff are laid off. So those, I think, are the conversations to have around profitability. We're so concerned with what is the dollar value at the end of the balance sheet and the income statement, but what is the human cost as well, right? So what my answer is, what is the ESG sort of acceptance of that company and the ethos of that company and the culture of that company? And if profitability means everybody gets to keep their job, then I think they've done a good job. Is that making sense? I'm not sure if
totally. Yeah. No. Yeah. I totally. I hear you. And it's taking me back to, one of the early guests on the podcast that said the phrase, purpose before profit, or purpose above profit. And really that's kind of ringing true again, right? That's exactly what you're saying is those values determining the connection of kind of that social impact, that environmental impact, that good governance impact of the company, tying that to values, making sure that the purpose comes first, and then profit will follow.
And there are companies that have successfully done this. We saw through COVID, we saw, companies having company-wide huddles and it goes to a vote, like this is not something that you normally would see, but it's determined by the outside factors like we just talked about. If you're a publicly traded company, of course you have more pressure on you. You can't leave it up to the employees. If you're a closely privately held company and you have 50 or 100 staff and you have that culture of this impacts all of us and therefore it will be a conversation rather than a mandate. So it really depends on the inside culture, but also the external factors, right? If you're highly leveraged and you have to have certain ratios according to your creditors, you may have to do layoffs, and that's tough. But again, it's how you go about that decision. Do you just send an email, or do you look these people in the face and make a promise to do everything in your power to get their jobs back as soon as profitability is up? So I think that's what it's about. It's not the decisions you make, it's how you make them and how you go about implementing these things. That really is what ESG should be about, in my opinion.
Yeah, no, the great points. Let's talk about some of those separation agreements. Some of your, and I'm making it sound like it's a regular thing, and you've had lots of them. But what would that departure, kind of the typical look like? And generally, has it been good?
Yeah, no, it has been great. I realize that it sounds so cheesy, but really the ultimate cap of my success is that they no longer need me. They're set for the future. Fair.
I can
I've
see that.
maybe hired somebody that can do a great job for them in-house, full-time, help that person get set up, coached, and really set up that business for continued success. A lot of my clients too are very project based. So, like especially on the M&A due diligence, it's the scope is very finite. They need me to analyze the books. They need me to give them a recommendation. They need me to build a model. Once those things are in place and they have financing from the bank, my job is done, and that's
Right.
a huge success because they obtained their financing, which is why they hired me in the first place. So it's very organic and there really aren't any hard breakup conversations to be had. It's just very natural ebb and flow. And as some clients come to an end, otherwise, others become onboarded. And so it's a really nice cycle of clients not needing me anymore and new ones coming online. So I've only ever had one really tough conversation where I thought I was getting into a business. It ended up being something completely different than what I kind of was made to understand. It became apparent to me that I couldn't do for them what I had promised to do. And after sitting on that for a couple of days and just the anxiety, the stress it was causing me, knowing that I could not do a good job for them, I basically had to let the client know, I'm very sorry, but we need to part ways simply because I couldn't do what I set out to do for you. So that was probably the most challenging day of my business, having to send that email off. And the client called me and tried to fight for me, and it was very sweet about it. But I said, it's just, I would be doing you a disservice by taking money from you and not fulfilling my end of the bargain, really.
Yeah. Not a terrible situation when you can see that in advance, though, before a much harder conversation if you're down the road and you're then having that conversation.
And that was honestly part of it. I said, better it's 2 weeks in than 2 months in or 2 years in. Yeah.
Yeah. So based on all of the, we've pulled out some great lessons. I mean, that anybody listening will be able to, to have some takeaways from the conversation so far. But if you were sitting down with somebody in small, medium-sized business, doing well, not doing well, or a startup, looking at starting something, what would be the main piece of advice that you could lay out? Maybe from a financial perspective, maybe more generally, but kind of from all of your experience working with the myriad of clients that you've had, not just, in the last with your business, but in general, what would the primary piece be? Or is there one?
Yeah, no, I think we all know that everyone is replaceable, right? But some people are more difficult to replace than others. So I would really encourage business owners to take stock of who those people are. Who are their most trusted, most relied on people around them? And it could even be outside stakeholders. We touched on your bank. It can be a really important pillar to your success. You have a good account manager that you get on with that will answer your email or phone call within a half an hour. That is an important business partner. Same with your lawyer, same with whoever. So really take stock and audit of who are those key people in your business, in your life, and figure out what motivates them, what drives them, what is their communication style, and make the interactions always pleasant. Have that person walk away from, wow, that was a great conversation. I feel really seen and valued and appreciated. That's how you earn trust. That's how you build longevity and loyalty. And then your business is really set for success. If you have those key people around you believing and supporting and being bought in and loyal, the rest will just figure itself out. But don't lose sight of that. It requires constant top of mind and maintenance. These relationships, you can't just say, okay, that person's good, I'll never talk to them again for 3 years. That person craves face time with you. And even though it might be a chore for you, if that person needs a one-on-one every single week, and that's what buy-in and loyalty means for them, that's what you have to do if you want your business to be successful.
Yeah, really, really good. I couldn't agree with you more, especially on the first point that everybody's replaceable, but certainly some, not as much as others. Yeah, absolutely. Anna, this has been really great. I really appreciate you taking the time. It's like I said earlier, so many good takeaways, and I think for anybody navigating through business, the finance side, the people, the human side, as you articulated so well, I think those are huge elements that we were able to give some good advice, and really appreciate it. Yeah, that was great.
Thank you so much for having me. This has been really fun, and I learned a lot from you as well. A lot of key takeaways from me as well. So thanks so much.
And
thank you.
And a good book to read.
Yeah, exactly.
Shoe Dog by Phil Knight.
Shoe Dog. I'll check that out. Yeah. Thank you so much.
Thanks, Anna.